Hey everyone, Adam here, and I wanted to send this recording out today because a lot of us are thinking about ways that we can save money, trim the fat, so to speak, during this difficult time. And so, one of the ways that a lot of us who are homeowners are able to do this effectively is to look at refinancing. Refinancing your home is a wonderful way to save potentially hundreds of dollars a month by lowering your interest rate. And this is a really great time to do that right now, despite what you might be hearing in the news about the housing crisis, yada, yada, yada. Um, Refinancing right now is something that a lot of people are doing. And keeping that in mind, I've asked my good friend and Director of Operations at Bank of England, Mark Andreotolla. Mark, to join us. Mark, hello, how you doing?
Hi, Adam. How you doing today?
I'm good. Now, I think the very first thing we need to clear up is that you are not actually in England. You are, Bank of England is a local bank.
Bank of England was started in England, Arkansas in 1898. It's a family-run bank, and over the years, they've opened several mortgage divisions, one being in Boston. Our office is actually across from the TD Garden. And it's funny because we talk to people, all over the U.S. and they get the Boston accent mixed up sometimes. But no, we're not from England.
So a lot of people, as I mentioned, have been calling me, have been emailing me, asking me about interest rates, what's going on in general. Can you just talk a little bit about that, and why is now a good time to explore refinancing?
Yeah, of course. Interest rates have been steadily decreasing since the end of 2019. So I'd say they're at the lowest they've been in years right now. We've seen rates stabilize significantly, though, after a period of extreme volatility due to the pandemic. There's new policy and guideline changes that are occurring, but in short, rates are definitely still favorable.
I would think that there's a lot of people out there that still have rates in the high fours or fives, but certainly I would think that if you're paying over five, then it's certainly advantageous to talk.
I wouldn't necessarily say there's a magic interest rate for borrowers to consider refinancing, because every borrower is going to be different. Every borrower is going to have a different situation. But I like to have the conversation on the basis of a monthly savings. So if lowering your interest rate can save you, $150 to $200 or more per month, it's definitely advantageous to refinance.
Obviously, with what's happening right now with this virus, I know that the rules to obtaining a loan to refinancing have changed a bit. Talk to us a little bit about what's changed and how that affects folks when they're going through this process.
So months ago, even before the virus had affected the U.S., we were seeing a steady decline in interest rates, which in return produces a high volume of mortgage activity. So refinances made up about 75% of mortgage applications, and that's roughly a 140% increase compared to last year. So this alone puts a huge strain on lenders. Now, with the virus essentially shutting down the U.S., we're seeing an increase in unemployment numbers, and the potential for forbearance or default on mortgage payments creates a higher risk for lenders. So to combat this, you can expect to see higher FICO score requirements, lower loan to value limits on refinances, meaning less equity you can tap into, and multiple employment verifications to confirm job stability. You want to confirm that a borrower is still employed through closing.
Okay, and I've heard actually now you're even getting employment verification the day of the closing in some cases. Is that right?
Previously we would do a written verification of employment and then a verbal 10 days prior to close. Mm-hmm. Now we need the written, the verbal, and a day of. They want to make sure that anyone that is going through the process will still be employed, because it's not only a risk to the lender, it's also a risk to the borrower if they lose their job and they just closed on a new mortgage.
Sure, of course. And then if someone is interested in having a discussion with you about this process, what first steps would they take? How would they, how would they start this process?
Give us a call. Discuss your goals with the loan officer. Whether you're interested in getting pre-approved for a purchase, rate and term, or cash out refinance, we can look at different options for you, run a few scenarios, and determine what works best. To get the process started for a refinance, generally we'll ask for a copy of your current mortgage statement, homeowner's insurance declaration page, 2 years W-2s, tax returns if you're self-employed or receive additional income, 30 days most recent pay stubs, and a copy of your driver's license or valid ID.
Well, Mark, I really appreciate you taking the time today to answer these questions. And I want to thank you for stopping by and hanging out with me for a little bit.
Thank you, Adam. I appreciate it.